I would like to bring the point of view of a large corporate like SNAM, which recently experienced a big change management process after the separation from ENI occurred in 2012 and the need to repay the entire debt towards ENI for more than 11 billion in a very short period of time. This means that our financial setup is relatively young, and that for that reason, SNAM is open to consider new potential improvement in financial efficiency and optimization. So now let me give you a quick snapshot of what we are, what is SNAM. In 70 years, SNAM has built one of the most important European gas networks, able to ensure flexibility, liquidity, security to the Italian system. Over than 6,000 people, a total regulated asset base of 25 billion, market cap of around 15 billion euros. SNAM is one of the Europe leading players in the construction and management of gas distribution infrastructure, and the second largest European player. Our strategy, in a nutshell, execution of selected investment opportunities, focus on operational efficiency and OPEX outperformance, solid balance sheet and efficient capital structure, and last but not least, consistent dividend policy. By the way, we are at a level of dividend yield of more than 5%. What we achieved in 2012. The refinancing exercise was challenging for some reasons that I will explain to you. The first is the large size of debt and the status was now of beginner in the bond market issuing. The necessity to achieve the refinancing exercise in limited time frame, difficult market condition characterized, as you can see in this graph, by concern on sovereign risk of peripheral countries and by high volatility and increasing fund costs for banks, and you see on the right, especially in the first part of 2012. Our all and now needs forced us to rely entirely on the banking system via pool and bilateral facilities. Despite all difficulties, our refinancing process was a success. We raised approximately 16 billion in less than 6 months, leveraging on a core group of 15 Italian international banks. We were able to repay our entire indebtedness toward ENI, to meet the financial needs related to our 4-year investment plan and dividend policy, and to have an adequate liquidity buffer. This also enables SNAM to tap the debt capital market with a proactive and flexible approach, reaching a more balanced and efficient financial structure in November 2012, when bond represented at that time 50% of our total indebtedness. An important achievement was the decoupling of our cost of debt from the Italian Treasury bond. That was a reference point in the first phase of our refinancing. Where do we stand now? In more details, the completion of the financing process, coupled with the market improvement starting in the second part of 2012, meaning falling corporate credit spread, decreasing bank cost of funding, and continued low level of nominal rates. I'm referring to what you can see in the slide, top left and top right, offered solid ground for new optimization action in the following years. In terms of new recourse to debt capital market, both via public issuance and via private placement, exploiting favorable market conditions and the compression of SNAM spread in debt capital market space. The extension of debt maturity and lower cost of debt, thanks to further disintermediation of the banking system and renegotiations of banking facility, more in line with the levels expressed by our bond curve. As a matter of fact, SNAM showed a proactive approach performing in advance pool and bilateral banking facility refinancing for an overall amount of approximately 5 billion euros, 3 times in the last 3 years, in order to extend the maturity and reduce the cost of the lines. A growing role of EIB financing, treasury management optimization via increasing recourse to uncommitted credit lines, maximizing the value of liquidity in the banking system, and further reducing our cost of debt. Optimization of the product mix, we will see later, and trade-off between the cost of flexibility in terms of committed line provided by the banks and adequate liquidity profile. I would like to stress again the importance of having a wide portfolio of products, each one used for different purposes. You can see in the slide the breakdown on the right side of the slide of our product. In particular, DCM, debt capital market around 11 billion, provide us with lower cost and longer maturities compared to banking sector. Combined, we can benefit here of a combined effect of abundant liquidity in capital market, inverse of stick for yield, and regulatory constraint for banks. Now, I would like to end with 4 takeaways from Dominic's presentation. First point, I heard about shadow banking as an alternative funding channel and or risk-taking channel. I believe that the disintermediation of the banking system is limited in our experience by some unique characteristics of the banking facilities. In particular, we can establish with the bank a long-lasting time relationship. We refer to the capability of the revolving credit line to meet corporate cash flow swings and rating agency requirements in terms of available committed funding. The flexibility offered by banks with regard to potential prepayment, repricings, term adjustment, renegotiation, offering potential upside for proactive borrowers. I don't know if all of this is possible through shadow banking. I have some doubts about that. Risks, second point. Counterparty risk is a key area for large corporate like SNAM and other corporate in Italy, of course, in Europe. In other words, to mitigate the risk, we limit the financial institution to those that have a solid credit profile and in general a rating at least equal to our rating. Third point, automation in Treasury and new services. It is fair to say that here I see ground to improve efficiency in the market. It is also crucial, I have to say, to guarantee an adequate level of reliability in terms of compliance procedures, crypto protocol, and so on, and to cope with interface issues with our internal system. For a group like SNAM, I see these main areas of development in cash management, payment insurance, less for what I've explained before in lending and capital market. To sum up, let me be a little bit provocative. The trajectory of the financial service in the cloud is certainly promising, but in my opinion will not be driven by large corporate, which will enter in a more mature stage of this product. I finished, thanks.
Very good.